What is the fastest path to financial freedom? Most people think that financial freedom comes from making more money. In reality, it comes from owning assets that produce income, whether you're working or not. That's why many investors are focusing on rental properties because it creates cash flow, appreciation, tax benefits, and leverage all at the same time. How much money do you need to become financially free? Financial freedom isn't a specific number. It's when your passive income covers your lifestyle expenses. For some people, that's going to be $3,000 a month, and for others, it's going to be $10,000 a month. The key is figuring out your target and building assets that generate income, like rental properties. Why do most people never achieve financial freedom? Most people spend their lives trading time for money. They never acquire enough income producing assets. They save, but they don't invest aggressively enough to maintain meaningful or create meaningful passive income. What is the best passive income stream in 2026? The best passive income stream depends on your goals, but rental properties remain one of the most powerful because they combine cash flow, appreciation, leverage, and tax advantages all in one asset. Is rental property investing really passive income? Not at first, because rental properties require work to acquire and set up, but with the right systems and property management, they can become one of the closest things to passive income that's out there, plus the additional benefits like appreciation and tax write-off. How much passive income do you need to quit your job? You need enough passive income to cover your monthly expenses plus a safety net or a safety margin. Most investors focus on replacing expenses first rather than replacing their entire salary, which is what we recommend. How do I buy my first rental property? Your first rental property is going to become in the right market. So when you're looking, you're going to select and understand your financing options, get a pre-approval, analyze deals. Most people think that to focus on the property first, but what they should be focusing on is the market itself and whether it's the best fit for your goals. How much money do I need to get my first investment property? It depends on the market or financing strategies. Some investors are able to get their first rental property for $20,000, while others are going to have to get it for $50,000 or more. The biggest mistake is assuming you need hundreds of thousands of dollars to begin with. What credit score do I need to get my first rental property? Generally, better credit opens more financing options and better terms. Many investors aim for 680 to 720 because it creates more flexibility and lowers the cost of borrowing and owning that asset. What is the biggest mistake that first-time investors make when they're getting their first investment property? Buying based on emotion would be that one, instead of the numbers. They fall in love with a property before verifying whether the investment actually makes sense and without running it through a due diligence process. Should I buy a rental property in 2026? What is the market like? The better question is whether the property and market makes sense. There are always opportunities somewhere in the United States, obviously, but successful investors are going to focus on buying the right deals rather than trying to time the market, which is what we always recommend. What would you do with $100,000 today if you had it saved up? I would focus on acquiring income producing assets that generate long-term cash flow and appreciation rather than letting my money sit idle on the side. Is real estate better than stocks? Neither is universally better. Real estate offers leverage, tax advantages, and cash flow. Stocks offer greater liquidity and simplicity. So really it's going to depend on what your goals are overall with your passive income. Should I pay off debt or should I invest? It depends on the interest rate, your financial situation, and your goals. In many cases, investing or investors balance both to look at which outcome is going to be done. Choose the right one after doing thorough due diligence. What's the safest way for me to invest $100,000? That would come down to diversification and making sure to achieve cash flowing assets. Safety comes from understanding the asset and maintaining strong margins rather than chasing high returns. How many rental properties would I need to be able to quit my job? That's going to depend a lot on your overall goals and what kinds of properties you're buying, the cash flow that each property produces, and your personal expenses. Some people need 2 properties, some need 20. Depends on your lifestyle. How many rental properties do I need to retire? Retirement isn't about a property count for your investment properties, it's about income. The goal is to generate enough passive income to support your lifestyle and financial freedom goals. Can rental properties replace my income? Absolutely. Many investors can build portfolios specifically to replace their earned and active income and create financial independence. How much cash flow should a rental really produce? Every market's going to be different, so the answer to this is going to depend on the properties that you buy and your strategy. You want to get and look at properties that are cash flowing after all expenses, that they have reserves set aside, and management costs are all covered. What is the best state to buy a rental property in 2026? The best opportunities for investing in real estate are often found at the city, neighborhood, or zip code level rather than the state level. So that's why a lot of investors are finding opportunities by using technical analytics with a team like ours. Is out-of-state investing worth it? For many investors, it can be. Some of the best opportunities exist outside their local markets, especially in areas where there's much better cash flow than what you're able to get in your own market. How do you pick the right rental market? Personally, for me, I look at the affordability, the rent to price ratios, the population growth, the job growth, whether the state or city is landlord friendly, and the long-term fundamentals of that particular market. What market would you invest in today if you had to pick? I would focus on the numbers and where the markets make the most sense with the numbers. When rents are supporting the cash flow and where long-term demand is remaining healthy. Why do most investors stay stuck? Analysis paralysis is the main reason. Many people spend years researching it and never buy their first investment property. What's the biggest lie about passive income? That it's completely passive from day one. Most successful passive income streams require effort up front before becoming a truly passive asset. Why do some rental properties fail? Poor market selection, bad management, overpaying, and underestimating expenses, and also extremely weak due diligence. If you strengthen those, you're going to be able to buy thorough properties that are going to produce cash flow for you. How do investors build wealth faster if they want to? By consistently acquiring assets, reinvesting the profits, using leverage responsibly, and staying invested long enough for compounding to occur like it should in real estate. Can real estate help you retire early? Yes, absolutely. Many people use rental income from investment properties for their financial independence strategy because it provides recurring cash flow, tax advantaged growth, as well as appreciation potential, depending on what markets you're buying in. What is the best investment for long-term wealth? The best investment is the one that you understand, you can hold through cycles, and that consistently compounds your wealth over time. Most investors that we work with have a very long-term view on the market overall.